Hey everyone, welcome back to Corporate Decoder, the place where we crack open those dense corporate filings to find the juicy stuff. Today we're diving into a report from 5C Lending Partners Corp. And let's just say they've been busy making some big moves with their stock. Stick around because we're about to decode what it means. Before we get into the nitty-gritty, if you enjoy getting straight answers from these corporate documents without all the jargon, smash that subscribe button. And hey, we have a thriving community over on Discord where we break down these filings even further, so make sure you join us through the link in the description below. Alright, let's get straight to it. On the 17th of December 2025, 5C Lending Partners Corp made a significant announcement. They've been selling shares of their common stock, and the numbers are pretty eye-catching. So what does this mean in plain English? The company sold about 1.6 million shares of its stock, and in return it raked in a cool $40 million. This is a pretty substantial amount of money, and it tells us they are actively raising capital from investors. They're doing this through what they call subscription agreements, where investors commit to buying stock over time as the company needs the money. Think of it like a company calling on its investors to draw down their agreed investment when they need funds for operations or growth, and it is not a one-off event. As of the date of this filing, they've already issued over 9.4 million shares, bringing in a total of more than $236 million. That is a huge sum of money being injected into the company from these share sales. This suggests a really active fundraising strategy. Now, they mention that these stock sales are exempt from the usual registration requirements. This means they are selling these shares directly to a select group of investors, not to the general public. This is common for private placements, where companies can raise capital more quickly without the lengthy and costly public registration process. They are essentially using exemptions under securities laws that allow for private sales. Let's look at the overall picture. By the time this report was filed, the company had almost 9.5 million shares of common stock outstanding. This number includes not just the recent sales, but also shares issued through their distribution reinvestment program. This program usually allows shareholders to automatically reinvest their dividends or other distributions to buy more shares, which is a good sign for increasing shareholder participation. Now, when we look at the financials here, the most pertinent information is the sheer volume of capital being raised. They've brought in over $236 million. For a company like 5C Lending Partners Corp, especially if they are in a capital-intensive business like lending, this level of fundraising is crucial. It gives them a massive war chest to deploy capital, make new loans, or perhaps acquire other assets. This kind of activity signals a company that is either in a strong growth phase or is preparing for significant expansion. They are clearly leveraging investor confidence to fuel their operations. The key takeaway is that 5C Lending Partners Corp is actively raising substantial amounts of money through private equity placements. This isn't a public offering, so it is important to remember these shares are likely going to sophisticated investors. So, what is our take on this? On the one hand, raising this much capital is a powerful indicator of potential. It means investors are backing the company and its strategy. This allows 5C Lending Partners Corp to operate aggressively, potentially acquire assets or expand its loan portfolio rapidly, which could lead to rapid growth. However, it also means they are relying heavily on these private placements. The speed of this fundraising suggests a strong demand for whatever the company is offering, likely investment opportunities in their lending ventures. A notable risk here is the reliance on these private placements. While efficient, it means the company's growth is tied to its ability to attract and retain these sophisticated investors. We also need to consider what they are doing with all this capital. Is it being deployed effectively into profitable loans or investments? Without more detailed financial statements in this specific filing, it is hard to say for sure, but the sheer scale of fundraising points to a very ambitious plan. In conclusion, 5C Lending Partners Corp is demonstrating a very active and successful capital raising strategy. They are bringing in significant funds from investors, which positions them for potentially aggressive growth. The key question moving forward will be how well they deploy this capital and whether it translates into strong financial performance down the line. Alright, that is our breakdown of 5C Lending Partners Corp's latest filing. What is your take on these fundraising efforts and what they might mean for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and don't forget to subscribe for more deep dives into the corporate world. And as I mentioned earlier, join the conversation and get exclusive insights on our Discord server. The link is in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.